operating business is a treasury operation that's securitizing Bitcoin. And the primary use that we offer to the marketplace is we offer high volatility, high leverage equity, like 2x Bitcoin in the equity or 1.5x Bitcoin. And that's very valuable. If you're an options trader or you're an investor, you would rather have 1.5x or 2x leverage on the equity. And the way that we create that in a systemic fashion is we strip the risk, the performance, and the volatility off of Bitcoin, and we sell fixed income instruments to the fixed income market that can't buy Bitcoin and doesn't want the equity and doesn't want the volatility. So when we sell a convertible bond, we sell a convertible bond at a premium. We might sell $1 billion bond, and we would probably capture 750 million or more in the arbitrage on the day we do the deal. And then if we hold the bond 6 years and Bitcoin goes up 21% a year, we make $3 billion on the back end. So we generate $3.7 billion of shareholder gains by arbitraging the duration on cheap capital with the return on a crypto commodity. And the people that bought the bond can't buy Bitcoin. They're convertible arbitragers, or they're fixed income investors, or they're institutional investors, or they have capital tied up in a 401k retirement plan. So if you understand those things, you realize that, it's kind of like, and I use this analogy, Jan, it's like if you looked at Standard Oil and you said, well, the company seems to be trading at a premium to the oil reserves. Well, no joke. That's because the company has a refinery and it creates kerosene. You ever try to put crude oil in a rocket, or crude oil in a jet, or crude oil in your car, or pour crude oil on a highway? The point is, you can't. You need asphalt, you need gasoline, you need kerosene, you're refining it. You can't do the refining without the reserves. So the Bitcoin reserves that we have a practical use. The use is they're collateralizing the fixed income instruments, and then they're creating volatility and performance for the equity instruments, which feed the option instruments, which create the volatility. And all of those things together mean that we're just kind of like a transformer. You got 480 volt 3-phase power coming in one side of the property. And on the other side, you want to run your daughter's hair dryer or